Well, Trump has interfered with oil prices again and has already stated that together with Iran, he will block the Strait of Hormuz and absolutely no one will be able to pass them. What does this mean? It means that the previous plan, which we and other experts had built, might now be called into question. In this video, I suggest looking at the current situation, identifying potential trades, and setting the right priorities for which direction to move in next. Let's move to the charts, and I'll actually start with my previous plan. A while back, I got a comment saying there couldn't be a triangle, there'd be no correction, and oil would definitely fly up to 160. What do we have at the moment? Oil has fallen, consolidation continues, and with every bit of Trump's rhetoric that hits the market, we're seeing a drop of 10 to 15%. And before we start, I want to show you how oil has changed since my last video. In it, I showed that oil could drop and pointed out two key zones. The first around 100, with a clear note that if it breaks, we'll drop to 90. And so I suggest you take a look at how that played out. After hitting 108, which is the accumulation price or volume zone, we first crashed to 100, bounced, and returned to 108. Later, we couldn't hold above that level and dropped down to that same 90 mark. So the plan I outlined earlier has been 100% fulfilled. And now the logical question is, what's next? So right now, I want to give you my perspective that Trump is doing a great job, of course. He's a red-haired devil trying to, do something in the global arena or for his country. It's unclear what he's up to, but that's not the point. All of his actions, one way or another, are still reflected on the chart. And believe it or not, technical analysis keeps working. So I suggest we see what happens next. My friend, at this moment, the correction we're seeing on April 13th has brought the price back to the 100 accumulation level. So essentially, we're watching a retest of this accumulation, and the asset's future is being decided right here. Roughly speaking, if it rises, we go back to 108. In the event of a further decline, we return exactly to 90. Just so you understand, it's still a sideways trend, and until it breaks out of the range above 108 or 9 and below 90, we're stuck sideways. These are the hardest trades. It's a pure correction, and we need to do something about it. So, getting back to my previous forecast, in the event that we are currently forming a triangle here, we should see the final move within wave E reach 80. So as you can see, that target was not reached. And in this case, we'll need to break through to the next level. It's also right here on the chart. To be more precise, that's 83 for Brent. In order to complete this pattern, meaning the correction will be fully finished in this case. And at the moment, my structure looks like this. So for a full understanding of the chronology, I'll show you the entire markup now, and you'll see for yourself why this is logical, why it's correct, and why I'm acting this way. Look, we had the first decline, so this isn't the final part, it's part A. A corrective move always happens in a 3. So as soon as the upward move ended and we began to suspect its weakness, right here. At one point, there was a completed triangle scenario, but since we didn't hold, we plummeted further. So it's canceled. At this point in time, the correction looks like this. Through a complex WXY combination, we finished part B and are preparing to move further. From here, the entire move will take place within descending pitchforks, shift pitchforks, to monitor corrective moves, where we actually stopped right in the middle. And if wave C is developing, which should consist of a 5, meaning if this cycle isn't finished, then in this case, we should see something like this. Basically a pattern like that for the formation of the entire move. We could use Fibonacci to monitor targets and say that we shouldn't rise above 62%. But, well, I've already mentioned that. I said there's accumulation here, and we're interested in the 100 to 103 level. There, you see the boundaries of this accumulation? It's 103.15. So whether you use FIBO or volume, it's the same level telling us we can't go higher. Consequently, we have a standard corrective three-wave move up. Well, at least for now, at this moment. And if we break our previous extreme, that's a short signal for us. So in this case, after breaking the 94.18 mark, we assume that a decline is the primary scenario. Let's map out the trajectory, something like this. So the final targets will need to be calculated once the decline is confirmed. But either way, the 83 mark should be reached in this case. Moving on. What if we see a move in the opposite direction above 62? And here, my friend, I suggest opening a clean chart where I'll show the trajectory of an alternative option, which, by the way, looks very appropriate here right now. I don't know, if I delete this, will it stay on the previous one? No, it won't. Everything's gone. Okay. We'll just work on one chart then. Look, if a third move is forming, so here's A, B, and C, and in the third move, our structure turns out to be a triple, and it is a triple. So if you remember, last time I marked it as the whole correction. That is, if we count from the extremum, then we'll get a clean triple. And if every subsequent move, starting from C, finishes its formation inside the pitchfork's uncertainty channel, we suspect a triangle. What does that mean? It means that the whole combination right now is going to look like this. So you and I will continue the sideways move for a while so that the entire correction can form here. So we won't go down very far, we'll stall for time, and then we'll shoot up to the upside, just try to catch this oil. Accordingly, what do we need? In order to form a triangle, you and I need to get a 5-move model. A, B, C, D, E. A, B, C, D. And actually, it's a little bit short here, as you can see. Every subsequent move after point C will be formed through the shift pitchforks. So the minimum target for this move is at the 38% level. The main one is at 109. We can rise above the previous extremum, this one, but not above the one before that. So accordingly, give or take, returning to our accumulations, we have every chance to pass the current zone, heading for the next one. But at the next one, we'll most likely stall. That's around 107, 108. Accordingly, after completing Part D, we'll adjust the guidelines and say that we're only missing one final decline. And I'd like to point out that overall, yeah, this structure doesn't imply any kind of deep decline, so just a sideways move and a correction. To find point E, the exact same set of pitchforks will be used, where the uncertainty channel, that is the median channel in the middle of the pitchforks, will mean a potential target for this move. But as it breaks out of the trend line or breaks point D, you can already consider a trade. So that's the second scenario. And so our task now is to put all this together to come up with some kind of trading plan that we can use. Look, if we form a downward move, that is, form an impulse, this is already my working chart, which I actually work with every day. 94.18, we said. Here we got 94.20. This is the level confirming the downward move. In this case, we're working toward 91. And as we've already touched on, 83.5 is the target here. So essentially, overall, a pretty good trade is taking shape. If we continue to consolidate, then our buy should only be upon fixing above 108. Or to be more precise, after the formation of another cycle. So to sum up, we need to take a pause right now to understand which model is forming, and after that, work in the right direction. I want to emphasize once again that regardless of what Trump says or what's happening on the foreign policy front, the chart gives us everything we need. If you're skeptical, here's my advice. Look for reports where it's revealed that before every one of Trump's tweets about Gulf blockades, negotiations, or delayed ultimatums, insider trades worth hundreds of millions of dollars happen 5 to 6 hours before the event. Once you see these trades and start spotting these patterns on the chart, you'll realize that the market has already priced everything in. So essentially, the market is just a reflection of human behavior. It's not about Trump or the news itself, but how people react to it. And unfortunately, that's just how the market works today. It finds out about events a little bit sooner than you or I do. That's all for now. If you have any questions, leave them in the comments. Bye.